Scottish Mortgage Investment Trust, or SMT, is a stock that I first made a video on back in January 2023. Since then, the share price has risen about 15%, but it's still down 43% from its peak seen in 2021. For the most part, there hasn't been any major changes to the company's strategy or holdings since my last video, but there are some important updates that I'll go over. Firstly, although no major changes in strategy, the weighting of holdings from last time has changed. Most notably, Nvidia has jumped from 1.7% of holdings to 7.9%, and also Moderna, while still in the top 10, is now at 4.7%, compared with 10.6%. They have also sold out of Illumina, which was around 4%. Other companies' weightings have changed slightly, but nothing major. Recapping from my last video, SMT has 4 main areas of investing. Again, this hasn't changed, but it's important to emphasize the high risk but high growth areas of investing. You're very unlikely to see SMT invest in defensive stocks with low growth, even if they are considered undervalued. This is a high growth focused investment trust. It is also important to remember that a good percentage of the holdings are in private, unlisted companies, like SpaceX. These private holdings give investors exposure to even higher risk and higher growth companies that they can't gain exposure to individually. Now, these private holdings are a main reason for making this video. Because they are unlisted, the value of the company is hard to determine. You can't just look up the share price and multiply by the number of shares held. Valuations are calculated internally and externally by S&P Global, which is an independent of the trust. Revaluation occurs roughly every 3 months for each holding. So before the recent share price rise that we'll get onto later, SMT has a net asset value of 920p and a share price of 820p. Doing some calculations, we can see that 241p of the NAV is made up from the private holdings. Now, as we know the NAV for public holdings, this is most part translate directly over to the share price, as there should be very little premium or discount applied to the SMT's public holdings. So using the information, we can determine that the 241p NAV for the private holdings is only being valued at 141p in the share price, thus what the market is valuing them at. This represents a 100p discount, or a 40% difference between NAV and share price. I do want to make clear that these calculations aren't exact, and there are so many things that affect the share price, and as private valuations aren't constant, as they are with public companies, some of the information is out of date. But it does still emphasize a large gap between SMT's valuing of their private holdings compared to what the market is valuing them at. Moving on, we can see the gap between the NAV and the share price, which has remained fairly wide over the past year. You have to go back to 2022 to find when the NAV and share price were closer together. As we can see, the discount or the difference between NAV and the share price has increased substantially since 2022, even reaching over 20% in mid-2023. So there are 2 main updates I want to focus on. First, to cause the share price to jump 5% on the 15th of March. This was that SMT announced a share repurchase program worth £1 billion. This is a large sum for a trust only valued at 12 billion, and therefore represents 9% of its outstanding shares. They have said that the discount being applied by markets is not reasonable, and that they are now taking advantage of this discount by buying cheaper shares. This shows confidence not only in themselves moving forward, but also the valuations they have applied to their private holdings. It shows they believe that these are correct and investors are undervaluing private holdings, and thus the discount to NAV is not justified. This will likely lead to the closing gap between NAV and share price, hence why shares jumped 5% following the news. The share repurchase program isn't the only recent news. Share prices continue to rise in recent weeks. The other news is that activist investment company Elliott is building a stake in SMT, which started last year and has now increased to over 5%, which I believe is the level for regulatory disclosure. This isn't the first time Elliott has built a stake in companies I've analysed. Over 2 years ago, I made a video on the pharmaceutical company GSK, in which they built up a stake. Now, what's different this time around is their motivations aren't as clear as yet. Normally, like with GSK, they build up a stake and then push for change within the company, looking to get a seat on the board and influence change. But currently, the only clear information is they have a 5% stake and they are supportive of the share repurchase program. Regardless of motivation, it is another positive, causing a boost of confidence for the stock. These two recent events have caused a reduction in discount. The positive sentiment has seen the share price rise, without much movement in the NAV, showing that the boosted confidence of the share repurchase program and Elliott stake has added value to the company without directly affecting the holding's value. The discount is still sitting at around 8%, which is still below long-term average. The slight negative to recent events is that higher share price and a lower discount means the share repurchase program is slightly less effective. It will still have a large effect on shares outstanding, but the company would rather purchase at a discount rate of 15 to 20% than the current 8%. Many thanks for watching. Please let me know in the comments if any of the recent events has changed your view on SMT and why. Also, please like and subscribe for